Singapore-listed REIT Ames Capital Industrial has grown its portfolio by close to 6% as asset revaluations continue to go up. Its portfolio in Q2 for 2013 financial year now includes 25 industrial properties around Singapore, valued at almost $1 billion Singapore dollars. Well, in these volatile economic times, stable income-producing stocks such as REITs remain popular, and analysts expect industrial REITs to maintain its robustness. Well, for more on its plans, I spoke earlier to McGrath, CEO Ames Capital Industrial REIT. And I started by asking what the drivers for growth will be looking ahead.
In terms of growth, we're very optimistic about the growth prospects for our trust, both from a DPU, so a distribution per unit perspective, so an income perspective, but also from a net asset value perspective. And there's really two key drivers of the growth we think for the next 18 to 24 months. One is we've been capturing a whole lot of reversions to market. So we've re-leased about 35% of our portfolio over the last 12 plus months and achieved an average increase anywhere between 10 to 20%. So that rental increase is starting to flow through to the bottom line, and you're really going to see the full impact of that in the March quarter of 2013, which is our final quarter for FY13. And then the other growth factor for us is the fact that we're doing a great big ramp-up warehouse development out at Galway. We're building about 1.2 million square feet of warehouse space, and we just announced to the market last night actually that we achieved temporary occupation permit on the first phase of that asset. So two key drivers of growth: positive rent reversions and growth from the completed development.
The company also took a management strategy on capital with a $500 million medium-term issue. What will the money be used for? Is it for expansion?
Sure. Well, we raised the money in August. We issued 100 million fixed-rate medium-term notes to debt investors, predominantly in Singapore. So that was raised in August, and we immediately used the proceeds to repay bank debt that was due in October 2013. So essentially, it wasn't to fund current activity. It was really just to repay secured bank debt that was due over a year later.
Why was this capital management strategy necessary at this time, especially when it could possibly raise your borrowing costs?
Look, it did raise our borrowing costs. Our borrowing costs essentially rose from about 3.5% to about 3.9%, all in across secured and unsecured facilities. And look, the board and management team took the view that the benefits of the transaction far outweighed the fact that it was slightly increasing costs. We've broadened and diversified our funding sources. So on the bank side, we've got 5 relationships with local and international banks. We've got a syndicate of 5 banks lending to us on a secured basis. But now we have dozens of debt capital market investors. So further broadened and diversified our funding sources. We're able to borrow on an unsecured basis. And one of the key positives of the transaction was we essentially increased the debt tenor of the trust. So we want our balance sheet to be a fortress balance sheet. We've now got 4 different maturity dates over the next 4 or 5 years. We've got next to no debt due in the next 2 years, and the vast majority of our debt's due in October 2015 and August 2016.
As far as your leverage is concerned, do you think that the 30% mark level is appropriate for the company?
Look, our policy is to be between 30 to 40% through the property cycle, but we have a bias to be conservatively leveraged. We're very proud of the track record that we've built up since the GFC. We've doubled the asset base. We've gone from $500 million at 30 September 2009 to around $975 million of assets at 30 September 2012, and yet over the last 3 years we've maintained average aggregate leverage at 30%. So we've been very financially disciplined in the way that we've grown. I think our sweet spot really is in the mid-30s, and with the completion of 20 Galway, the development transaction I referred to earlier, our leverage will rise to mid-30s.
And that was McGrath, CEO Ames Capital Industrial REIT.